Welcome to Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high energy updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to Crypto Republic, bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. As always, thank you to everyone who supports this channel. Liking the video and subscribing really does make a difference. I love hearing everyone's comments and answering them. With that being said, let's break this down. Something big is happening to XRP supply, and the market hasn't priced it in yet. Most people watching XRP market are looking in the wrong place. They're watching price. They're watching headlines. They're watching social media sentiment. But the real shift, the one that actually matters, is happening behind the screen, inside the infrastructure layer, that almost nobody talks about because something big is happening to XRP supply. And the market hasn't priced it in yet. Not because traders are missing a chart pattern, but because most people don't understand how modern financial rails are being built. Today, we're going to walk through how value actually moves, why interoperability is becoming the backbone of institutional crypto, and how Ripple, XRP, Wormhole, regulated stablecoins, and tokenized assets quietly intersect. This is not hype. This is not a price prediction. This is about mechanics. Before we go any further, there's one question that matters more than anything else. Why now? Why is this conversation happening today and not 3 years ago? The answer is simple, but most people miss it. Institutions don't move on narratives. They move when infrastructure, regulation, and demand finally line up at the same time. For years, blockchain technology existed without clarity. Then regulation began to form. Then tokenization moved from theory into real issuance. And now, interoperability has matured enough to handle institutional scale. What you're seeing now isn't experimentation. It's transition, from testing to deployment. Let's talk about why supply matters more than price. In the early 1970s, oil traders didn't understand what was happening at first. There was no headline saying global shock. There were no dramatic charts. What there were quiet ports. Tankers that usually sat waiting for buyers were suddenly being rerouted, delayed, or held for logistics. Oil hadn't vanished. It had simply stopped being freely available. Prices didn't react immediately. They reacted after the system realized supply was no longer sitting idle. That same dynamic shows up again and again in history. Markets don't move because people believe harder. They move because liquidity shifts. Every major asset reprice in history followed the same pattern. Supply became constrained, demand became structural, and price followed after the system adjusted. XRP is no different, but XRP's supply story isn't about burning tokens or artificial scarcity. It's about where XRP lives, how it's used, and what happens when it's pulled into infrastructure instead of exchanges. When assets stop sitting idle, when they become embedded in settlement, liquidity, and cross-network flows, they effectively leave the open market, and that's where things start to change. I want to talk about the quiet rise of interoperability. Here's the problem. The financial system has been trying to solve for years. Blockchains don't naturally talk to each other. Liquidity fragments. Assets get siloed. Capital becomes inefficient. Institutions can't operate at scale in a world where value is trapped on isolated networks. So the real race hasn't been about which chain is fastest. It's been about who controls the bridges. This is where interoperability protocols enter the picture, not as high products, but as plumbing. And one name keeps showing up where large value actually moves. Wormhole. What Wormhole actually does. In the 1800s, railroads weren't valuable because of trains. They were valuable because of the switches. The companies that controlled where rails connected, where cities linked to which markets, quietly controlled commerce. No one speculated on steel tracks. They speculated after trade routes became unavoidable. At its core, Wormhole isn't a token people speculate on. It's infrastructure designed to move real value between networks. I want you to think of it less like an app and more like a clearing corridor. Wormhole enables assets to move assets across blockchains while preserving issuer control and unified supply. Instead of fragmentation, you get global accounting. Instead of wrapped assets, you get native issuance. This matters because institutions don't want 5 versions of the same asset floating across chains. They want one source of truth. Let's pause for a moment and zoom out for a second. Here's what actually matters so far. Interoperability is no longer optional. Issuer control is becoming mandatory. Let this sink in. Issuer control is becoming mandatory. Huge. Regulated assets are scaling across chains, and liquidity is being pulled into settlement, not speculation. Everything else sits on top of that foundation. Happy Monday, everybody. What a morning in the markets. I want to go over something real fast about silver price dynamics. I'm going to tie all this into XRP and what we're talking about institutions. Silver prices are surging globally. U.S. futures 110, Shanghai 123. The spread between U.S. and China fluctuated from $11 to $15. Now it's 10. It's massive what's happening, right? I mean, right now at this recording, you're looking at silver at 114. China's aggressive buying is moving U.S. futures higher, showing how interlinked global markets are. So you can see already interlinked global markets. I want you to remember this theme, okay? Industrial and corporate pressure. Chinese and Indian solar industries are heavily impacted. Their margins are getting compressed due to rising silver cost. Industrial buyers are now forefront running investment demand, securing silver to stabilize future supply chains. This is a shift from theory to reality, ladies and gentlemen. Industrial demand is so big and it's shaping price, not just investment speculation anymore. So what are banking and market effects? U.S. bullion banks, including JP Morgan, face operational stress through trading. Profits may emerge later. Who even knows if they're making any money on this? I mean, what's happening right now in the markets, as far as I'm concerned, is almost unbiblical proportions. Banks are actively acting defensively. The U.S. government absorbs broader system impact. Market chaos favors those who can endure volatility. The long-term strategy over short-term gain. There's a bigger geopolitical strategy here and geoeconomic strategy, right? The U.S. is reducing Chinese influence in Latin America, notably around silver and critical minerals. This could be in response to China basically saying how rare earth metals, they're going to restrict them. Maybe the U.S. is saying, well, you won't have access anymore to Venezuelan cheap oil or South American silver mines, which you spent a long time building asymmetrical hybrid supply lines. Who knows? The silver price spike acts as both a market signal and geopolitical tool, defending access to resources and disrupting China's supply chains. Its weaponization of commodities across silver, copper, and oil becoming instruments of national defense and strategy. The broader implications for financial infrastructure. Commodity markets are increasingly a reflection of state-level strategic competition, not just trading dynamics. So you're looking at supply chains in the East and West. They're being hardened and structurally very differently. Industrial demand is shaping future trade flows. I said this in previous videos. Silver acts as a canary for larger economic and strategic shifts, and in the future, it's still going to act like that because this is where everything is happening. It's become like a lightning rod. It's highlighting the intersection of finance, industry, and geopolitics. Speculative takeaway. There's no clear intentional market manipulation. Both China and the U.S. are acting defensively. The U.S. holds structural advantages via the global reserve currency and control over critical supply chains. The outcome? China absorbs commodity inflation and stagflation risk. The U.S. industry and government remain insulated, potentially using silver and regulated metals as a bargaining tool in global trade negotiations. Remember what we were talking about? The bungee, the price. And I told you that what I use as a compass is the spread in Shanghai and CME. Right now, I really believe, and this is not financial advice, this is my professional opinion, they're going to look to crush the margins in the EV sector in China, solar sector in India. At these price levels, it's very hard to see if they can even make any money in this space, right? So this is almost a rip your face off rally, but it's also castles in the sky. And if it's almost going to be run by who can outspend each other. And at this point, there's no way China can outspend the U.S. The U.S. is the global reserve currency. You can just print more money whether you like that or not. That's just what it is. So it's definitely why I said in previous video, geoeconomic situations tugging at each other. The way not to get cut up sushi like this, try not to go in at highs. I wouldn't recommend going into the water right here, right now. This is like going in the beach and when there's a riptide and you're going past the red flags, you're going to get dragged out to sea. A good swimmer knows how to recover from being caught in a riptide, but chances are it doesn't have a happy ending, right? Now, I want to take this back into XRP right here again, okay? I want to welcome everyone who's new to our Patreon, all members of the Wolf Pack that support the channel in the membership section of the channel. Thank you very much. Welcome. Ladies and gentlemen, with XRP, data from blockchain analytical firm Sentiment shows that the XRP's 30-day market value to realized value, the MVRV, write this down, market value to realized value, MVRV, very important, write this down, is at negative 5.7. At that level, analytics firms characterize as a potential buy zone, okay? We're not giving you financial advice. That's what they characterize it. A negative 30-day MVRV is not a guarantee of safety, ladies and gentlemen. Again, it's not financial advice. It's learning how to read the compasses of indicators. It's a signal that the trade is less crowded than it would be if recent buyers were sitting on a broad market-to-market profits. Over that, liquidity, however, sits a derivatives market that looks more fragile than on-chain value framing implies, okay? According to CoinGlass, data puts XRP futures open interest at roughly 3.3 billion. That's large enough to force liquidations to steer price. So if they run stops one way or another, you could see a short-term price blitz over a short window, particularly if a move really gains speed, okay? Sentiment also flagged another volatility mark in XRP earlier this month. It's pointing to a 3-month high in transactions above 100,000. It's recorded 2,802 such transfers in a single day. That level of whale activity indicates how large players are active within the market. So in practice, that tends to accelerate volatility either direction, regardless of where the next market impulse is. I want to talk about quick with institutional inflows remain strong right here. A primary differentiator in this cycle compared to previous XRP downturns is the presence of regulated access points and verified institutional demand. This is so important, ladies and gentlemen. You got to write this down or rewind the video. Data from CoinShares shows that XRP has seen institutional inflows of approximately 90 million this year, placing it among the top 3 assets by inflow. Institutional appetite is corroborated by the performance of spot exchange-traded funds. XRP ETFs have recorded 68 million in inflows this month alone, pushing total flow to 1.23 billion since their launch last November. The emergence of these products has changed the composition of the marginal buyer as XRP demand has shifted from crypto-native reflexes where traders buy dips because indicators are oversold to flow-based allocation driven by mandates and rebalancing. That's macro, that's massive. This transition supports the thesis that current undervaluation may be preluded to a more sustained recovery driven by sticky institutional capital rather than fleeing retail speculation. What does this mean? Ripple's corporate expansion. Beyond market mechanics, okay? XRP's valuation is no longer just a function of spot flows and derivative positioning. Instead, it's increasingly being framed through Ripple's corporate buildup, a campaign that looks less like a payments company scaling a product suite and more like a crypto-native investment firm assembling distribution, custody, and prime brokerage plumbing. Over the years, the strategy has produced a long shopping list, including the acquisitions of Palisade, Medico, G Treasury, Rail, Hidden Road, which has been rebranded as Ripple Prime. Alongside the acquisition push, the firm has also pursued a licensing strategy to expand its addressable market. Ripple has aggressively targeted regulated footholds in the UK, Liechtenstein, positioning those approvals as a framework it can use to passport services across European region and extend into institutional jurisdictions over time. It's massive, this news. Massive. This corporate trajectory means Ripple's enterprise push can be read as a bullish signal from the broader platform. Yet, XRP remains the liquidity proxy most exposed to retail sentiment and reflex positioning. For value-focused investors, and this is not financial advice, the gap is increasingly the point, with XRP trading between $1.90 and $2, $1.85, $1.80 was the low. The divergence between Ripple's expanding footprint and the token's distressed pricing is being used to reinforce an undervalued narrative. What that means, institutions are coming in. When institutions play, they respect resistance and supply trench lines. They're all playing the same point. This crypto is becoming more of an institutional play now than any form of retail play. The price of all cryptos is suppressed right now because you can really see what comes out of Japan with the free money and where it flows to make alpha. You can really see what's on display here. And again, this is not financial advice. This is just my opinion and what it shows me. The free money that comes from the whole Japanese situation, whether it be the widowmaker, the carry trade, the pension fund managers over there, the hedge fund managers over there, they will look for the easiest point to create alpha. Right now, the easiest point for them to create alpha is in the metals market. Plain and simple. I tell you this every video. The prop traders have to make their weekly numbers, their monthly numbers, their quarterly numbers. Everyone is watching the spread between Shanghai, London, CME. It can only go down so much. It can only go so high so much. Again, this is what's happening. So when people talk about the carry trade, they talk about the widowmaker. I think I'm the only one who talks about this here, at least in this space. It's always going to be the easiest way to make money. When I first started in finance, the carry trade was put right into the Royal Bank of New Zealand and the Australian Central Bank. That gave those commodity-based currencies gave the highest interest rate. So that was a pure arbitrage with no risk involved whatsoever. No risk. Other funds and people borrowing the money have a higher demand to make higher alpha for their so-called benefactors. So what they'll put it in is that. Remember, Goldman's price target was 5,400 for gold towards the end of the year. By the end of the year, at the way things are going, there's no top in place. So as castles in the sky keeps building and this rip your face off rally happens and you can see it going up and down, like the analogy I gave in the last video, this pertains. I want to go right back to XRP, what I just said. XRP is being acquired by institutions now. Whatever the future is going to be, it's being built in front of us. You have the powers that be behind the financial systems in the western side of the tranche. They need to have an answer for this, what's going on. Tokenization of all real-world assets is one, speed and settlement is another. You can see, and at least in my opinion, how Ripple has played this magnificently by acquiring all these licenses and the whole list of companies that we just said that they acquired. So institutions are coming in right now and buying. Retail, it's harder. When something trades institutionally, there's not a very big range. It's not. That's why this spec money right now is in the metals market, because it's moving very fast. They can get in and get out. These markets don't really move. What, a 20-point move in a day, a range? If you consider in the spread and fees that you have to put into trade, there's not really much meat left on the bone. Again, why we're the remora? We're feasting on the chaos. Right now, there's full-blown chaos. Harry Houdini could make an elephant disappear in front of a crowd from a diversion, a distraction. To me, all of this is such the biggest distraction right now while people begin to hoard as much of these cryptos as they can, because eventually it's not going to be inexpensive anymore. I'm not the price guy. I'm not going to give you a target price of what I think. I am a macro person seeing where the world is going, because I remember being one of the first outfits into solvent extraction, electrowinding in parts of the world where people thought we were nuts and that I was doing bath salt, when I said, look, I have this rock and I'm going to put it in this autoclave, which is a fancy word for a dishwasher, and I'm going to spray it with acid and I'm going to leach precious metals out of it. People thought we were crazy. Looking now, it's almost standard in places, right? Standard. I love the environment. So to me, I found that way of doing refinery very important. In a lot of places that we were in, guess what? They would never allow us to own what was below the ground. We could not do that. We had to purchase feedstock from miners, artisan scale miners from different areas. And most importantly, we had to do geological surveys to make sure that those rocks had the same compositions, because no two places on Mother Nature, Mother Earth, have the same, geological makeup. Okay. So, with a whole group of us, we spearheaded how to do that in a lot of places. Today, why I'm talking about this on this video and what I went through first, trying to keep this so we don't sound like we're in some kind of thesis for a PhD in finance, right? It's all institutional now, baby. It's institutional. XRP has gone institutional. Once you go institutional, it's boring. It's like drying paint on the wall. You can't, it's like sometimes too hard to hear. Weak hands get shaken out. There's no thrill involved in it anymore. The thrill is long-term. Just remember this. How long was silver depressed at prices? $32, $18.50, $50, and then it blew through this. How long were people told one thing about acquiring precious metals, as opposed to not. You know, if you look at situations, and everyone on our Patreon heard what I had to say this morning about this, they romanticized finance in the 80s and 90s with certain kinds of movies, Barbarians at the Gates, you know, Wall Street, Pretty Woman. These financiers could do such things with debt, gold and silver nobody cared about. It wasn't really big, you know. Warren Buffett made a big move in silver before the dot-com crash. So if you look at what's happening right now, as no one's paying attention, you're going to see people scoop up and gorge on this. And where the world is going is this. It's our viewpoint that there may be a U.S. government shutdown, unfortunately. I'm not going to speculate on what the reasons are, why or whatnot. At this point, it looks like that could just be. That could be a suppression on prices. That could be also adding some more flow into the upside of the metals. But again, the easy money, the free money coming out of Japan, remember, it got called back in from the 1.1 trillion in U.S. treasuries because the pension fund managers there, it was too expensive for them to have that move. It's got to find a new home. That new home has to sit down through trading systems and create more alpha than it costs to borrow the money. So they're going to find whatever investment product that makes sense according to their one-pagers and their disclosure documents to their funds and their customers, that they can give the returns. The metals market is producing the range and the flow for that right now. It's not in the crypto market. The crypto market is acting right now more institutionally, as far as I'm concerned, in my opinion. None of this is financial advice. And if you made it to this point, I still really appreciate you. We're getting to the candy part of the Italian ice. So they got to look for that. So that flow of money comes in. Now, if you rewind what I just said right here to what I just said about XRP, that is the reason why XRP is being acquired by institutionals. And if you look at the indicators that I just spoke about and you write them down, take out your map, write those indicators down on the west side of the tranche underneath XRP. I want you to write those indicators down and why. It tracks the whale money. It tracks sentiment. It tracks a lot of things. I look at all of these indicators as the vital signs of a living patient. You know, your pulse, your heart rate, all of these things. It's important. It's boring. This is when we're in the trenches right here, right? In daily financial combat, where our training, our Gucci discipline, our Gucci clarity to what's happening makes all the difference. This is not just some meme situation anymore. Why I'm comparing this to silver right now, and we'll come back and look back at this video, what I just said, how long silver was kept at $32, $18.5, $18.75. I mean, I remember the trading bands, right? But people were hoarding it the same way that we hoarded it, okay? But we were taking it out of the ground. So again, at what point does the supply and the mechanics of the market to XRP cause this spring to bungee higher? You know, there's a lot of other macro XRP analysts in the space that are much more brighter than I am on the whole evolution of this. They've been here longer than me. I'm looking at this as a financial mercenary. I'm on the same trench line as these guys, without a doubt. I'd be going into the abyss, you know, the space, the trench, probably before them, because I'm looking to get what I got to get. But we're all on the same team, the same side. I learned from these people. 100% these professionals. I give you a salute because, again, these crypto XRP OGs, as I call them, okay, they have been keeping the lighthouse lit for everybody for a long time. So to throw shade on what any of these gentlemen and ladies have to say, well, then I could say that, you know, I tell you not to throw mud on anybody. But again, they're brilliant. Macro coming into this. I'm looking at this as a financial mercenary, how someone on the floor of the Mercantile Exchange would look at this, dissect it, what I used to make money, where we're going and why, okay? Because for everyone who we represent in any type of situation, they have different time horizons. If you're day trading, you have one time horizon. If you're weekly trading, another time horizon, monthly, quarterly, these are all different, okay? You got to stick to your plan right now and don't get shaken out on this. I see all the comments. I know the videos are too long, so we'll go back to 3 videos a day and what it will be with that. Don't get shaken out here right now. Remember why you're in this, because everybody that had silver very inexpensive and sold it, well, look how they feel right now. The Bitcoin person with the pizza, look how they feel right now. XRP and these other cryptos, HBAR, are going to have their moment in the sun, and it's coming, okay? It just doesn't come when you want it to come. That's just the point, unfortunately. You have to be able to outlast the market. I tell you this all the time, Jesse Livermore, price size, everything. Stay this Gucci clarity. Don't get cut up like sushi, okay? So, what we're talking about again, I really believe this is a geopolitical argument with America and China. And as they try to flex with metals, they're going to get pushed back. So there's the dominant theories. JP Morgan's being squeezed. That's the market blowout theory. Okay. China's being squeezed. That's the supply chain pressure theory. Both cannot be fully correct in isolation. Here's a third explanation. Both the U.S. and China are defending access to Latin American silver. It's defensive behavior, non-intentional market manipulation. The outcome, multiple losers, few winners. Market chaos favors whoever can endure volatility. Here's a corporate industrial impact. Chinese and Indian solar industries have been hit hard, margins compressed. Industrial buyers now front-running investment demand for silver. Samsung's calling people like us with concessions, looking for things. Supply chains in the East look compromised, Western supply chains being strengthened. Look, here's some market dynamics. JP Morgan and other U.S. bullion banks may feel pain on trading, but government absorbs impact. Okay, so industrial and national interests align. China's suffering, U.S. government not. Here's a speculative implication. U.S. may leverage silver to influence China's access to critical resources. U.S. reducing Chinese influence in Latin America, removing Maduro from Venezuelan board. Weaponization of silver as a strategic commodity in the U.S.-China standoff. Silver becomes a signal in the canary line for broader strategic resource control. Here's a historical strategic insight. China has historical interest in silver dating back to the 1800s. Price action reflects hoarding and self-preservation on both sides. U.S. may be using silver and other commodities to negotiate rare earth oils and strategic leverage. Okay? So, if you look at rapid overnight silver rally in both U.S. and Shanghai markets, spread contraction shows China's buying influence in the U.S. futures. This matters because the question is not the spike, but the underlying strategic dynamics, okay? It is geoeconomic, right? The U.S. can outlast everybody here because we're the financial reserve currency of the world. China financially, due to their reserve currency, cannot. So this could really be, something to watch, okay? Let's get back to the video. Why institutions care about this? Retail tends to focus on narratives. Institutions focus on risk control and compliance. They don't ask if an asset's trending. They ask who controls issuance, whether it scales and whether it can operate under regulatory oversight. If an asset can meet those requirements, it doesn't matter how fast or popular it is. That's why interoperability isn't optional. And this is where Ripple's strategy becomes clear. Ripple's multi-chain strategy. Think about SWIFT before the headlines. When SWIFT was introduced in the 1970s, almost no one outside banking paid attention. There was no retail excitement, no price chart, no speculation. But once banks adopted it and quietly became unavoidable, by the time people understood its importance, the system was already locked in. Ripple has never positioned itself as a retail-first crypto company. I want that to sink in. It is focused always been on payment settlement, compliance, institutional-grade infrastructure. That philosophy shows up in how Ripple approaches multi-chain expansion. Rather than chasing hype, Ripple focuses on controlled issuance and regulated liquidity. Ladies and gentlemen, this is why RLUSD matters, not as speculative stablecoin, but as a compliance-first settlement asset designed to move across networks without losing oversight. I want to talk about native issuance and versus wrapped assets. There's a critical difference between wrapping an asset and issuing it natively. Wrapped assets introduce counterparty risk, they fragment liquidity, they weaken issuer control. Native issuance preserves supply integrity and regulatory compliance. That's why institutional systems favor issuer control burn and mint or locked-in models and mint. How XRP supply gets absorbed. Think about gold leaving the vault. For centuries, gold didn't move much in price until it stopped sitting in vaults. When gold shifted from decorative storage and settlement, collateral, and reserve banking, its role changed. It wasn't scarcity that mattered, it was function. When XRP is used as a settlement asset or liquidity rail, it doesn't sit idle. Let that sit in. It becomes working capital, and this is where supply dynamics change. Mechanical supply absorption. This isn't about XRP disappearing. It's about XRP becoming occupied. Active supply behaves differently than idle supply, and markets are slow to recognize that. Here's a mental model, okay? Think of exchanges at a warehouse. Settlement rails are highways. Assets in warehouses are easy to sell. Assets on highways are busy. XRP moving into infrastructure isn't about scarcity, it's about utilization. So here's the stack coming together. Tokenization platforms, interoperability layers, regulated issuers, settlement rails. This is how capital markets modernize. No single press release announces it. The system just quietly locks in place. Here's a contrarian balance. None of this happens overnight, ladies and gentlemen, does it? Institutional adoption is slow, boring, watching the paint dry on the wall. Liquidity builds before price reacts. Quiet periods don't mean nothing's happening. They usually mean infrastructure is being laid. So what to watch next? Well, I want you to think of the internet backbone. In the late 1990s, investors chased websites. The real winners were the companies laying fiber. No one celebrated routers. They were boring. No one hyped protocols. They were boring. But once traffic flowed through them, value followed instead of watching price. Instead of watching price, watch where these assets are issued again. Watch how liquidity moves across chains. Watch rails institutions actually use. Which ones? Because no one rings a bell when infrastructure goes live. By the time it's obvious, the system is already running, and that's how markets really change. Ladies and gentlemen, your support keeps allowing me to bring these deep dive, high value insights to the crypto community. Liking and subscribing really do help us. Stay curious, stay informed, and we'll see you in the next one. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Have a great day. Stay emotionless, always, and watch XRP. This could be a defining moment. This content is always for informational and entertainment purposes only and should not be taken as financial advice. Always do your own research, consult a licensed financial advisor before making investment decisions. Remember, the game is changing, and those who understand it first will benefit most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves they'll never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally, because some moments in history are loud, but ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink because the world is distracting you with noise, while XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. It's just the beginning. This opened your eyes. Smash that like button. Ring the bell. And leave a comment with your thoughts. Turn on notifications and most importantly, subscribe to Crypto Republic. We break down the global banking trends shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, and stay in the Republic. Love you all, always.